How's it going, everybody? This is BeatTheBush. Today, I'm going to talk about Tesla, and is it too late to buy it now? Here's a disclaimer. I do not recommend to buy nor sell Tesla. I do own it myself though. I'm merely presenting the information here so that you can decide on your own. This video is brought to you by Webull. They have a new incentive. If you buy $1 of cryptocurrency, you're gonna get $5 of Shiba Inu. This is on top of the 2 shares of stock that you'll get valued between $1,100 and $2,300 just for signing up and investing any amount. Check out my referral link down in the video description below. Tesla's breaking out, reaching a multi-month high around $833 right now. Quarterly numbers are gonna come out on Wednesday of next week, October 20th. I don't actually go and listen to every single earnings call, nor do I follow these numbers because most of the time people are really hyper focused on the delivery numbers. If it's higher than their estimate or lower than their estimate, sometimes they're right, sometimes they're not. But in the long term, you really just gotta think of where the company is going. So this is a more certain thing for me where I just think about, are they gonna sell more cars next year? This is all I think about. And if the answer is yes, you have to buy it if the valuation is low. So I'm gonna cover what I think the valuation is today. And I think some of you might be very interested in how much Tesla I hold. Do I hold any, and do I plan to sell any? And I'll leave that towards the end of the video. All of this is not to say that these quarterly numbers are not important. If you are investing, buying and selling from month to month or week to week, these numbers are very important. You have to wonder if you're going to buy or sell right before the earnings release date. So the way I invest is really for slightly longer term, maybe 6 months to 1 year, hopefully 1 year, because I'm trying to get the lower capital gains tax here. But I am pretty certain that Tesla is going to make more and more cars. They're opening factories left and right. There's huge demand for this car. I own a Tesla Model 3 and I think it's awesome. It's the best car I've ever driven. This is better than the Toyota MR2 that I've had. This is better than the Porsche Boxer that I've driven. It's a more expensive car, but man, for long distance drives, it really reduces your fatigue. I'm a believer of the products, and because of this, I think there's a bright future for Tesla long term. But short term, I think the valuation might be a little bit lofty. In order to get a picture of the valuation of Tesla, you have to look at earnings per share. So here we go. Last 4 quarters, this is important because it's gonna factor into the PE ratio. They earn 27 cents per share. So you can just use this number and divide it by the share. And then 24 cents 3 quarters ago, 2 quarters ago, 39 cents. And then last quarter, they earned $1.02. So this total is the last 12 months of earnings. It's $1.92. So the current stock price is $833. It might move by the time I release this video, but with 812 divided by 1.92, you're gonna get a PE ratio of 426. This is a huge number because it means that Tesla needs to operate at the current level for 426 years before it can pay off its own share price. This is a huge amount. Usually for, let's say, Google tech stock, right? It's a more mature tech company and its PE ratio right now is around 30. If you look at PE ratios of, let's say, Netflix, when it used to be really high before they made more and more earnings, around mid 2018, the PE used to be over 150. So considering Tesla, it's over 400. It means it's either too highly valued, the price is too lofty considering where its earning is gonna go, or that maybe investor thinks that the earnings, it's going to catch up with the stock price. In this case, in order to make the PE ratio 30, the earnings actually needs to increase by 15-fold. So is this possible? It's a huge goal to ask, and the stock price really needs kind of perfect execution, or if Tesla just appears to be growing exponentially forevermore, then yes, you know, maybe you can keep on having 400 PE ratio, but usually for tech companies or really huge companies that are just sort of starting off, right, PE ratio is really high. But then it starts to come down after the company starts to mature a little bit more. When I talk about maturing, it means the earnings that they earn per share starts to see sort of like an asymptote. It's kind of growing exponentially right now. And, you know, I wouldn't be surprised if they double their profits during the next quarter. But when you start to see, let's say a couple years down, 5 years down, 10 years down or something, right? When you start to see their profits kind of taper off in an asymptote, right? That's when the PE ratio is going to catch up with the stock price. Now, I do want to say something about AI Day because it came out August 19th, 2021. I've marked it here on the stock price chart over here. And you can see after they released that, the stock kept on going up. Is it because of AI Day? I do not think it's because of that, because Tesla bought, if they are successful in developing a consumer product that someone can buy, I don't think it's going to be in the hands of the consumer for another 5 years. So it's not going to make a perceivable impact on the stock price at all, because, you know, this is just, you know, some plans going forward. With that said, I do want to watch the clip with you guys of the actor inside a robot suit that looks like Tesla bot. Okay, here we go, because I thought it's just really ridiculous. It's like some guy doing like a robot dance move. Maybe like 20 seconds too long here. I don't know if they need. That's like the most cringe thing I've ever seen. And yet the stock price keeps going up. I guess investors just kind of looked at it and just kind of chuckled, right? I chuckled too, but oh my gosh. Anyway, Tesla bot, carry capacity 45 pounds. It weighs 125 pounds. You know, they put all these specs in it. This is like a vision, I guess, of Elon Musk. Now, first of all, Tesla is a car company. It's not being valued as a car company because the PE ratio is usually down in the low digits, single digits. Tesla is being viewed as a technology company, which it is. It has all this full self-driving software, right? They sell it for $10,000 a pop, which is about to come out. But I want to go back to looking at things if we're in a bubble, because what do you use to see if the entire industry is in a bubble? You use the Shiller PE ratio, which is the price of the S&P 500 divided by average earnings, average over the past 10 years. So how do you calculate this thing? You look at all the companies, how much they earn, these 500 companies, how much they earn over the past 10 years. If you have a Google, if you have a Tesla, you add up all their earnings and then you divide it by 10. This is your average earning per year, and then you divide the S&P 500 price by the average earnings per year, and then you're gonna get the Shiller PE ratio. Over the past 140, 150 years or so, you can see Black Tuesday, a dramatic drop from Shiller PE ratio of 30, and the .com, which is most recognizable, from a drop of around 45. Right now, we're at a current Shiller PE ratio of 38, which is quite high. And if you look at back in the .com days when we were at 38, you look at how much longer will the market keep on going up from when it hit a Shiller PE of 38. It looks like, you know, eyeballing it maybe a year or two. So if you think that we are in a bubble and then let's say you go and try to time the market, sell everything, you're gonna keep on watching the market go up and up and up, and then maybe it might crash. Who knows if it's gonna crash? Who knows if it's going to go beyond the .com Shiller PE ratio of 45. But by these metrics, it does seem lofty. Sometimes you have to look at things macroscopically in the context of the entire stock market. Is it gonna burst, right? Is this market gonna crash? Because if it is, it's gonna bring down all stocks, including Tesla. No matter how well it's doing, no matter if it's selling more cars or whatnot, people are gonna freak out and they're gonna sell all their stock, and all of a sudden your nice $833 per share Tesla is gonna drop quite significantly. Now, I don't want to scare everybody or anything. I just want to present you the data and you decide for yourself. And as promised, I'm going to show you guys my Tesla holdings. I still have 200 shares. My initial buy-in, the second buy-in, the first time I bought it, I earned a realized gain of $60,000. The second time I bought it, I went back in. I went in at around $600 a share, and now it's $833. So I made a, something like about $48,000 or so. So 60 plus 48,000, a total of $108,000 worth of gains. Thanks for watching this video. Don't forget to give me a like and subscribe for more.